Hey everyone, Coach Investor back to another video for today. So as the title or the thumbnail says, welcome to the new chapter of Palantir. First positive gap net income quarter. So congratulations to the team. I think nobody really expects this to happen right now. And maybe that's why the stock is up 14% at the time of recording this video. Of course, there's still the earnings call to come. Then that might change some things, maybe on the upside, maybe on the downside as well. But don't forget, we'll have the CPI report this week, I think tomorrow or the day after, and that will probably dictate what the stocks will do, especially growth stocks. But let's have a look at the quarter right now. This was a big positive when it comes to profitability, but in my opinion, when it comes to continued growth, right, that 30% growth, right now, there are some signs that this is not happening as of now. This is slowing down actually, but maybe we'll get more information later on. Now, I'm just going to go over the press release, going to say my thoughts about that. Then after the earnings call, after I've went over the presentation, I'm going to do a second video, which will be more detailed. So if you're interested in all of that, hit that thumbs up button, subscribe if you have not, I would really appreciate that. And if you enjoy this type of videos and want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. All right, so let's first read this. By the way, they beat on the top and bottom line. So Palantir reports its first quarter of positive GAAP net income, GAAP EPS of 1 cent in Q4 2022. With these results, Palantir is profitable. This is a significant moment for us and our supporters, said Alex Karp, co-founder and CEO of Palantir. Well done, Carpetto. Now, GAAP net income for this quarter was $31 million. GAAP earnings, 1 cent. Adjusted earnings per share was 4 cents, so they beat on that. Total revenue grew 18% year over year to $509 million. They expected it to grow, well, the consensus was around, I think, $508 million. So, of course, they beat on that. US revenue grew 18%, so it outgrew the total revenue. This was to be expected. Alex Karp himself said that, well, US adapts much faster than the rest, especially Europe, so they expect, well, US side to outgrow the rest, which is logical. So that grew to $302 million. Commercial revenue grew 11% year over year to 215. US commercial grew 12% to $77 million. Of course, commercial will become in time the bigger segment of the business. Government revenue grew 23% year over year to $293 million. US revenue grew 22%, so this time a bit less than the overall one, and that grew year over year to $225 million. Now, as for the customer count, that grew 55% year over year and just 9% quarter over quarter. We've seen this quarter over quarter slow down for a while now. So US commercial customer increased 79% year over year from 80 customers in Q4 2021 to 143 customers in Q4 2022. And I believe I wrote something in my notes here, which was, it was 132 last quarter. Now, when it comes to loss from operations, that was negative 18 million, representing a margin of negative 4%, but that's up 1,000 basis points year over year, to be expected because, as you will see with guidance, well, there's more positivity when it comes to profitability for this year. Adjusted income from operation, $114 million, representing a 22% margin. I'm going to skip this right now because we're going to talk about this a bit later in this video. Now, as for the full year, total revenue grew 24%. So again, not really that 30% growth. US revenue that did outgrow, so 32% year over year for the US side, that reached $1.16 billion. Commercial revenue grew 29% year over year. US commercial 67% year over year. So again, that point of the US part of the business is outgrowing the rest, which is something that, well, we knew of. But of course, now with everything that's happening around the world, but maybe especially in Europe as well, they probably see the positive impacts that Palantir has on one of its clients or many of its clients. So maybe they might adopt it a bit faster, but to be honest, when it comes to Europe, I don't really have my hopes up. And then for this year, again, we're going to have a look at that in just a second. Now, if I scroll down, we can get to the outlook. So for Q1 2023, they expect revenue to be between $503 and $507 million. As you remember, We just said that this quarter's revenue was $509 million. So again, when it comes to growth, this is not really the picture you want to see, right? Of course, overall, the picture right now is good, but quarter over quarter, they expect revenue to be down. So yeah, that's something maybe they'll clarify during the earnings call, and I'll update myself in the second video. And then adjusted income from operation of $91 to $95 million, so that's okay. For the full year 2023, they expect revenue to come in between $2.18 billion and $2.23 billion, so that's even an increase of around $300 million year over year. Adjusted income from operation of $481 to $531 million, and then they expect GAAP net income, not for one quarter, but they expect GAAP net income for the full year. So that's great. Again, that's one huge positive, and that's probably why the stock is up so much after hours. And now, of course, everybody's favorite part when we talk about Palantir, and granted, this is important to look at, especially for a company like Palantir, total stock-based compensation. So for this quarter, 2022, we're now at $129.3 million. Last year, $166.9 million. Huge decrease here year over year. What happens for the full year? Same story there. Big decrease. This year, well, 2022, $564.7 million. Last year, $778.2 million. So again, the story continues here. Stock-based compensation continues to go down. The profitability of the business goes up. Revenue goes up. That's what we like to see. And suddenly, one of the bear cases is slowly but surely dying. And now, going back to the adjusted free cash flow margin that I've talked about before. Well, I said I'll skip it, so I'm going to talk about this right now. You can see here that adjusted free cash flow for this quarter is down year over year, and then the margin as well. We're now at 15% margin, last year 24%. Now for the full year 2022, we are at 11%. 2021 was at 28%. So again, going the wrong way. Let's see how good this year will be as a, let's say, correction when it comes to the downtrend here. And of course, the same could be said when we talk about adjusted EBITDA, 24% this quarter, 30% same quarter last year, or 23% in 2022, 32% in 2021. Now, before I leave you be, I just want to show you two last things. One, a quick reminder, because now with the AI frenzy fully going on with ChatGPT, Microsoft, Google, etc., just a quick reminder here, and I'm showing you a tweet here from Arnie, but I showed you this as well in a past video. By the way, he has a great Substack, so go follow that. It's also free. Now, was said here by IDC, Worldwide Artificial Intelligence Platform Software Market Shares in 2021. Number one, Palantir. Of course, the updated numbers might vary, but Palantir is already a huge player in this market. And when it comes to ChatGPT more specifically, of course, somebody already found something that we probably all missed when it comes to the earnings call. I believe it was Q2, so I let it play right now on the screen.
We just launched an experimental feature that leverages OpenAI's GPT-3 to turn natural human language into pipeline logic. A sentence like, "Find me all the hospitals that have limited ICU bed availability in the next 3 weeks," is transformed into a pipeline in seconds, a new standard in no code.
So of course, when all the focus is suddenly just on two major companies, Google and Microsoft, people forget other players in that field, and people forget other companies that have been working with ChatGPT, OpenAI in the past. I didn't know this. I found it out not so long ago. I think this is a pretty important thing to remember, that Palantir is already a big player in that field, has been utilizing these functionalities as well. Now, really last thing is obviously the graph. Right now, I just checked again, stock is up 20% at the time of filming this video. So we closed the day at $7.61. Right now, if the market, let's say, opens, we're at $9.18, which means we are just at the 200-day moving average. This is on the weekly chart. Of course, on the daily chart, you see a huge gap there. So beware from gaps, but this means that over the 200-day moving average, we will have to close pretty strong. Otherwise, as you can see, the last 2 weeks, we tried the 200-day moving average, but we got rejected heavily. Then big red candle. And then this week, well, obviously right now with the earnings, we will have a huge green candle there. That might change with the CPI report remains to be seen, but this is just on a technical analysis basis. For long-term investors, we just wanted to see that the business is doing better. Profitability-wise, it's doing much better apparently, but growth-wise, we'll have to wait and see what they say during the earnings call. And for those people that will suddenly comment, oh, it's up 20% after hours, I wish it was going down so I could be buying more. Don't lie to yourself, you were never going to buy, even if it went lower. So, to conclude this video, good quarter, good outlook when it comes to profitability. When it comes to growth, I still have some questions. I will listen to the earnings call, update you all in the second video throughout this week. We'll have a long earnings week, so stay tuned for that. Obviously, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.